In that story, we saw a victim of predatory lending. We also mentioned a number of other reasons, some factors here. This summer, right now in the Miami Valley, what are some of the main reasons why this problem has become so serious?
Well, we had seen predatory lending, but we're seeing more and more now of what I refer to as more traditional triggers of foreclosure, those being a reduction in income, a loss of employment, uninsured medical expenses that a family might encounter, divorce, or the death of a primary wage earner. All of those sort of more traditional things that occur in life have been affecting Miami Valley residents, putting them at risk for foreclosure.
And has that changed as the unemployment rate goes up? This is getting more serious, less serious, on a plateau? What do you see?
I think it is getting more serious in our area. I think I've referred to it before sort of as a perfect storm. The unemployment together with some of the more exotic mortgages that people got when they refinanced their homes, when the refinancing boom was taking place, has really left a lot of people vulnerable.
Beth, let's talk about it from the point of view of a housing counselor. What is your estimate of just how big of a problem this has become? Is there any one area that you point to geographically? Any one type of person who falls victim to this? Is it across all boundaries of age and gender, race? Who's being affected?
It really does cross all the boundaries. You know, we're seeing folks who are from all different areas of the Miami Valley. And, you know, one thing I want to point out that's common is that these are long-term homeowners. These are not people who went out and bought too much house and now they're having trouble making their mortgage payment. These are people who have been our neighbors for years, who have had an economic event and they're now facing potentially foreclosure, losing the roof over their head. And it's a shock. It's a shock to folks, particularly when they're our neighbors and our long-term neighbors.
In a lot of cases, isn't it true, and I'll get everybody's take on this, you all agree this, for a lot of families, this is their first go-around on this. These are the people who have never been through this before?
Absolutely.
You're hearing that? Alfred, you're hearing that as well?
Without a doubt. And the thing that is probably most frightening is that I get a sense that this may be just the tip of the iceberg. I'm afraid that what we're seeing now is a small portion of what we're going to see in the next 12 to 24 months. So I think it would behoove everyone to get prepared and to start working towards those devices that can be put in place that will help everyone deal with this, because I think it's going to get a little better before it gets worse.
Okay, and I'm going to stay right with you. I want to talk about the early warning signs. You could give me one or two, Susan. Maybe somebody else would come up with a couple of ideas. Start with the early warning signs for the majority of families facing this problem. What do they see first?
Well, other than the traditional triggers that Jim mentioned, usually when you're having a real difficulty making ends meet, when you find out that what you used to be able to accomplish out of one pay period or one paycheck now just doesn't go that far. Now you have to delay some things until the next pay period. Sometimes just because you've lost some income. Other times just because things like your mortgage has reset, your adjustment has happened, property taxes have increased. There's a variety of things, but usually the paycheck's just not reaching as far as it was. That is an initial and very true indicator that there's going to be an issue, there's going to be a problem. And at that point, that's when you start to seek some assistance or start to take a look around.
Take action. Susan?
And I think that's and since its inception in April of 2008, we've referred over 13,000 Ohio consumers to housing counseling agencies who do a great job in assisting these folks. And in participating and seeing some of the calls that come through, it is sometimes that one hardship that really drives that family into foreclosure. It could be that maybe mom or dad, lost some hours, they couldn't quite make a pay here, their car broke down, and then it just escalates from there. So, just like Beth said, it can happen to anyone, it can happen at any time, and the first thing you need to do is take action soon.
That shows you how many families are so, what they call it, financially fragile.
Exactly.
That's the right phrase here? Okay, so Jim, let's talk about that person who is in trouble. They've seen some of these indicators now. On that first sign of trouble, what should they be doing? What's that first step?
Well, I think the first step is to understand what the problem is, gather the information that you have available to you together. So look for the documentation about your mortgage, because whenever you seek help, which is going to be the next thing that I'm going to say, or that some of us will say is, reach out and ask for help from someone. You need to take documents to people so that they can be evaluated. But you have to start getting your act together, pull together your paperwork. Alfred talked about that sometimes people are afraid to do anything, and I think that that's true, but you have to really be proactive and look to see what resources are available for you.
Okay, so once I've done that, I've got my paperwork and it's laid out, I know what I'm doing now. Are there options available to most of these homeowners? Are there options out there that might be able to help? Beth, could you name one?
There are absolutely options. I think that's, the most important point that people should walk away with is that if you're not able to make your mortgage payment, it's not the end of the world. There are options available. So it might be a repayment plan with the mortgage company. It might mean a mortgage modification or loan modification. It might mean a short sale. There are a number of different options depending on the situation. So it's the wrong thing to do to move out of the house, and it's the right thing to do to start exploring what the options are.
And keep those options open. Does everybody agree early action preserves options?
Absolutely.
Is that the right phrase, Alfred?
The earlier you get started, the more apt the bank is to work with you. One point that people have to keep in mind is that your mortgage payment is the bank's paycheck. And when in fact the bank is in threat or is being threatened by losing their paycheck, then they like to know it as early as possible. They're going to work with you a lot more when in fact you present a legitimate situation to the bank. The bank does not necessarily want your house. They don't want to foreclose. They have an infrastructure to handle foreclosures, but it's overburdened. They don't want to.
We're going to take an email question now. This has come into us at our website here, anticipating that we're going to have a lot of questions throughout the evening. Let's listen to Susan from Dayton. She says, once I receive a foreclosure notice, how long do I have? How long should I stay in my home? Beth, what would you tell Susan?
First of all, stay there, because once you move out, you have fewer options available to you. The lender is much less likely to work out something with you if you're not living in the home. And besides that, it makes it harder on the neighborhood. So it depends on what county she lives in. If she lives in Montgomery County, it might be a year before she would actually go all the way through the foreclosure process, or even longer, excuse me, even longer. So sit tight, start looking at the situation, start reaching out, let's look at the options, and stay in the house.
And there's probably a legal angle to this as well.
Of course there's a legal angle.
Of course.
I can talk very quickly in terms of the general timeline, but generally after a foreclosure complaint is filed, the homeowner should receive a complaint, and it's just like what it says. It's basically the lender's complaint, and then they have to file something called an answer. That's 28 days, and then after that, if they don't file an answer, the bank has a couple of options. They can either file something called a default, or sometimes it's a motion for summary judgment. I know I'm talking a lot of legalese.
We'll
but,
have plenty of time for more legal talk.
Okay. But in terms of the timeline, generally what we tell folks is that it's probably at least 6 months and probably more like a year.
Maybe more. We've seen how the mortgage crisis is affecting homeowners, and we've heard from our panel. Coming up, we have lots more information about where to find assistance. Remember, if you run into trouble, help is available.
Call the United Way helpline at 211. For more information, of course, on foreclosure, go to thinktv.org/mortgage crisis.